The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
And we finally have some action. As I said the last few days, that's what I was looking for is into Wednesday. I thought maybe it would be late Wednesday. It happened, of course, right at the open. We had the big sell down. Basically anything lower than a close of about 25.60, what is that going to be, 25.62 or so. Is going to be a very bearish signal. Of course, everybody's trying to pile in and buy the dips, which they've done for the last few years. The question is whether or not they've got enough juice to do it. My signal, again, would be on the close, but I think we've got it. So not going to be surprised to see everybody kind of try to dive in here and buy the dips. But my thought is that we've got a pretty clear signal that many sectors out there have seen their highs, at least for the mid-term, if not the long term. And we'll see how these markets move. We've been down this road several times, and of course everybody wants to buy the dip as usual. But we'll see how the end of the day comes out. If we're still down 10-8 points or so, I think we've got a fairly considerable signal out here that unless we have some kind of super blowout earnings later this week, which I do not expect, because the expectations are sky high already, the best I think we can do is kind of go sideways, but we'll see. We're down 12 points on the S&P cash. What did we do for volume, though, on the way down? We're already at 2.4 billion shares on the NYSE as we start the show. When a lot of days on the upside, we've had problems getting to 1.6 or 1.8 billion shares. So we're a good 500 million shares above what normally happens at this time. So it's going to be a huge day down, probably one of the heaviest volume days in a few months, I suspect, if this trend continues. So we'll see what we've got, but as long as we get the kind of a definitive lower close out here by the end of the day, I think we can make a fairly decent case that we've got some kind of signal in the market. And again, they're not going to make this easy. The dippers are going to buy. I could be wrong, and I'll know by whether or not they can get this thing back up anywhere close to break even on the end of the day. My thought is with the volume and a lot of cracks in this market, along with my models that I have on the market, show that we have the widest divergence in the markets going back for about 17 years. So I'm expecting quite a storm, kind of the equivalent of not having any hurricanes for 12 or 15 years, and then you get one, and then you get another one. There is a reversion to the mean, and I suspect that we've got the reversion to the mean starting today, and that is volatility backed up to a historical norm, at least in the VIX, somewhere around 30. Eventually, this kind of just has to break. Now, will everybody try to sell off volatility? They certainly will. Will everybody try to buy the lows today? Yes, they will. So it's not going to – a market does not top in one single event. And most of the time you have to back up quite a ways before anybody thinks that a top or a considerable top is in. I suspect that there may be political considerations for this, a little bit probably on taxes, but I don't think that's the majority of it. I think a lot of people were worried. Let me put it this morning. I think they're going to get a lot more worried that we've had a major Watergate level event We now know, of course, that some, I'm going to say upwards of 10 major administration folks, people from attorney generals to the head of the NSA, CIA, FBI, are all complicit in at a minimum of a cover-up and actually being part of a major event. And my guess is that we're going to have a pretty good year of congressional insight on why Russians bribing the United States United States officials for our uranium was glossed over and hidden, why some of the FBI agents involved in it that wanted to report to Congress were threatened and forced to sign non-disclosure that they would never talk about the deals that were made. There's more than enough stuff out here in the last 24 hours that shows massive, just absolutely massive, what would you call it, corruption. And like I said, all these guys that were out telling everybody why they should believe something knew all about this stuff in 2010, covered it up. We've got a special prosecutor knee-deep in this. We've got a former FBI official knee-deep in this. I would not underestimate how big this could become, as it's never the actual crime, it's always the cover-up, as they said. Yeah, there's already calls for massive special counsels and other things like that. The reason I'm so sure about this was probably the 2 years I spent in a grand jury, got to see how it worked from the jury side of these corruption cases and how some of these things go. But very interesting to see that apparently Mr. Nunes from California was not told that his side was behind the phony documents. And of course, these documents were then used to press a something into a special counsel, and that special counsel was based on a pack of lies paid for by the party he is part of. So I'm assuming that no one told this guy that this was not a stone that you didn't want to open up. But we have a virtual Pandora's box that, just on what we know now, is far bigger than Watergate. So watch out for political considerations. I wouldn't put it past anybody to have thrown this thing out to derail the agenda and distract everybody from what looked like, maybe a possible tax deal getting across the finish line. Politics is probably the worst business there is. Would people think about throwing people under a bus to get their way? I think they could. But I wear a lot of tinfoil hats. My guess is that this is going to get a lot bigger, and we've got 10 major people that were approved by Congress that look like their hands are extremely, if not filthily, dirty. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And you can always email me at path@tfnn.com. And you got a question here. Do I think the wheels could fall off the wagon on the market? And I think, yeah, we've had that. As far as historical norms, if you just look at the data, and I've got a model that scores incredibly high, doesn't mean it's 100%, but it scores better, orders of magnitude better than anything I've tested in the past, and I've been writing models since about 2003. That we have a huge divergence here, and that could mean as much as 100 points to the downside on the S&P cash, just to get back to fair value on earnings and on and just the market up on light volume. So wouldn't be surprised to see a big haircut. Doesn't mean it has to happen, but I am set up for that in the way of options. Okay, so what else do we have going on? We're still off 12 points, and of course everybody will want to try to buy everything that they can, but we'll see. We got to get the market moving here, so we've got to do our history.
And it's all just a little bit of history repeating.
On this day in 2002, Richard Harris, whose career spanned 6 decades, included starring roles in films ranging from Camelot to Harry Potter, dies of cancer at age 72 in London. Harris was known for his acting talent as well as his carousing off camera. He was rather famous for that. He was everything a bad boy Hollywood star should be: handsome, boozing, brawling, womanizing, jet-setting, whose moody magnificence brought glamour to even his weakest movies. But to me, there's a story buried in here from his life. He sang a song called MacArthur Park. Anybody that's heard it they kind of maybe like it once or twice, and then pretty soon you find out that it's a song, as many people say, from Satan. But to me, that wasn't it. It was a barroom bet by Jimmy Webb, who was a famous composer through the 60s, 70s, and 80s, who was at a bar with Harris. They were both flat drunk, and Jimmy Webb bet him that he could write him a song that was over 3 minutes long, and that is, I think the song's actually 7 minutes, but bet him that he could write a song longer than 3 minutes, which, of course, most radio stations wouldn't play at the time, and he could still make it a #1 hit. And he would bet Harris $1 million that he could write him a song, Harris could sing it, and he would give him a #1 hit. Well, he did exactly that. Harris had to cough up $1 million. And a couple weeks after this thing hit #1, and Harris wrote Jimmy Webb a check for $1 million. Harris borrowed his brand new Jaguar, and Jimmy Webb did not see him for another 7 months. His convertible Jaguar came back 7 months with over 80,000 miles on it. That's the way things rolled around Hollywood back in the, what was that, 68, 72, somewhere around there? On this day in 2002, Richard Harris passed away. I actually liked him the best in the Unforgiven movie. I thought he was the absolute perfect guy and probably the best actor in that movie, although everybody was a murderer's row of good stuff. In a couple of days, the Hong Kong Hall will be closed. That's the end of probably the last big trading pit in the world. Almost everything has moved to electronics, which I thought was kind of interesting that I didn't even know this place is still open, but apparently there's 7 traders still on this Hong Kong pit. And as I said, we're pretty much lately, whenever you find yourself on the majority, it's time to pause and reflect. And it's time to get to charts out here, which is, are we a little early? Yeah, sometimes I don't make it to 2:30 before we get to charts. But I wanted to start looking at movers and see if we see anything. A lot on earnings. Going to start off with Boeing. It's down $8. A little surprise out here, 3%. A lot of these things had been in a trend up, and you got a fairly decent signal out here that this is broke. That means that the next couple of levels down in the market for Boeing would be 246.49, and the possibility, although not the probability, of this getting back to 215. This gap has never been tested from July 26th. So that does set up. One of the things that you do see if you look at this on a longer time frame on my Power Law Vector indicator numbers is this thing took off on May 18th, got up to 246 on July 31st, pulled back to the low on August 11th, and went up to this level. The energy, though, was down by about 25%. I think we did this last Wednesday, where we watched how many of these previous highs were being retested. But a lot of these legs show that the energy, since these midsummer or late summer, just has never really come in. Of course, we got some fairly decent volume here today. Never a big fan of being short Boeing because eventually they're going to be the best house on a bad neighborhood. I think there's a lot of stocks that could actually go down a great deal lower. Other earnings-related news, NLSN, Nielsen, right? I always think of the recording artist Nielsen. Every time I hear about Nielsen, the people that are looking at and seeing what's going on. This came down with a huge volume. You got to think these guys are going away. It's just too easy to get data from somebody else other than Nielsen these days on what people are watching. Into the previous low of June 22nd. That day had 2.5 million shares. We hit it today with 6.6 million. You bounced a little bit, but I can't think of a business that's less necessary going on in the future than Nielsen. Those little boxes that have been telling people what you've been watching for years as a sample just don't seem to be very apropos in the day of digital delivery where you actually know what everybody is watching. Eagle Materials, these material stocks, I had a bunch of them in the newsletter this morning showing that they were testing previous highs on lighter volume. This one already did. I wouldn't have pulled the trigger on this thing, but certainly tested the January 26th high on EXP. This one had 1.1 million shares. You got into it with 850,000. This thing would have gotten up here with maybe 500,000. I probably would have looked at it a great deal more. But we're going to go through a lot of these stocks today. I hate to say the lightning round because it sounds so cheesy, but we will be going fast. Not as fast as lightning, but as time permits, we'll go through as many as we can.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Got a question about the IBB and what I think. You got a pretty large sell signal on the close of the 18th. I just like the way this thing's coming down on light volume, or not, light volume and light. But question is whether I still see $300 on this, and I still do. Question was whether or not someone should sit on the November puts, and I still like it. I'm of the opinion right now that unless you see a close above, let's say, 25.65 on the S&P, that you got a fairly decent sell signal. So, you're going to need about 7 points higher before the close. And, have we seen that before? The answer is yes, but your answer is going to be in the close today. I think we're probably going to see that last 30 minutes turn into a sell signal even bigger. I'm just hoping that we kind of get up close to that level so I can add more shorts to the positions. I never really got the opportunity to start throwing on more. I was already short, and I was short with the most leveraged position I could get in options. So I'm feeling pretty good today already. I had a bounce of about 40% in my short position in options. So feeling pretty good. We had a little, was it a lot bigger? Yes. But my guess is that this is more of a multi-day thing and maybe even 3 weeks. So I'm going to, I think we could probably, everything I'm looking at, including the summation index, says that we could continue to sell off into Thanksgiving. So I'm more than willing to sit on my hands here for a while and let a winter run than try to pick the exact second of coming in and out of this market. But again, we get above 25.60, I'll probably add some short positions into the close today, as long as we can see it. But we got short volume down, or strong volume down. We got 2.5 billion shares. This is telling me, I think, everything that I need to know. And the only thing is whether or not I can pile on late in the day. So let's get into some of these other ones out here with earnings. As we talked yesterday, going into earnings out here, it was kind of hard to think that this thing would hold up, but was very tough to figure out what they were going to say in the earnings call about how much they were affected by the mass shooting a few weeks ago. Well, excuse me, this is the wrong Win. I was thinking WYNN. This is the other one, the result ones. So forget all that. Never mind. This thing broke and was under the 3x3 for a while. But going into earnings, there wasn't a lot in that one. Ingersoll Rand is another one that broke today to the downside. It's off 4%. A lot of these things were way up here, and some of them even had volume at the highs. What they didn't have is energy really going in. This one had a nice run up to the July 10th high off of the March 27th low. You got this, but one of the things that never really happened in September, by the 10th of September, we should have started seeing very strong volumes pick up over and from the summer. We never had that in pretty much the entire market, other than the fact that the SMHs everybody was piling into, which is always a warning signal of impending doom when everybody hops on one individual sector to move everything. To ALK. This is the Alaska Air Group. This one had been kind of the darling for a long time of people that like playing the airlines. Well, you got a massive sell signal on massive volume today. This is breaking the previous lows. Let's go back and look at this one in a little longer. You've got a kind of a consolidation range back down to this, $70.92 low for the day. But this actually consolidation range could go down to 65 to 63 before this thing finds support now. But this is broken. So I don't know. I certainly wouldn't be buying. But if you're short this thing, you'd probably hold on for somewhere between 65 and 63. Nautilus Baby Supplies. This one didn't have much of a movement on its news. just about 1%. So not much in this one, and kind of a wide-ranging dark cloud cover the last 4 or 5 days after earnings. This is going to give you a signal on this one if it stays here for the close. Again, we talked about one of Joe DiNapoli's patterns that I really liked. I've tested it a lot, and seems to have a good opportunity risk-reward for huge movement instead of just, making a few bucks. These tend to pay off fairly well, so I like this one. But it is many days, 10 to 15 days above the 3x3 or 9-day moving average. In this case, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You had 14, maybe 15 days above it. You have a few days below it. In this case, you had 4. You close back above it. The next day, you close below it. That's it. And I think we brought this up for the IYT, the same thing. And that's why I was kind of saying that today would be the day that you wanted to pull the trigger on this thing. I think I mentioned it to somebody that asked me, and I said today would be the day if you get if you get the kind of move you're looking for, this is the day when this thing would kind of roll. And I think we said Wednesday, and I think we said, anywhere below this, as long as it stays below this 3x3, you want to stay short this thing. And the risk reward, pretty amazing, even for a day where everybody is trying to buy the dip. We're off 13 points on the S&P, by the way. And, if this thing can't get up past 25.60, that's very weak. If it can get up to 25.62, 63, that's about medium weak. So we'll see whether or not we get any more juice before the end of the day. I'd like to see 25.60, like I said, so I could add more positions. Okay, what else do we have? Again, you can email me at path@tfnn.com, and, of course, call me at 877-927-6648. We've got a bunch of other ones to look at here today. Okay, not much action on Visa. This does have a nice little kind of spinning top up here. You want to watch the open on tomorrow's tick and see if you get a little abandoned baby out here on Visa. Not projecting that, not predicting it, not being Nostradamus on it, just saying that if you did get a gap down of a couple bucks on this one, you would have an abandoned baby. So you probably want to put that one down and see what you get for tomorrow's morning. When we come back, we're going to look at TMO and maybe give you a little TMI on TMO. See what I did there? Be back in a minute.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I had a question about my models, so I thought I don't show this much, and mostly because it's part of my newsletter service each day, which I share with my newsletter subscribers. But one of the reasons why I've been so incredibly bearish is that I've made a model. That model has 25, 30 different data points coming in. A lot of things that people normally look at, some of the things I've actually constructed. And over time, it's incredibly good at finding the relationships between things like price and volume, ticks, put-call ratios. I mean, like I said, I got like 30 different data points. Some of these things aren't straight from the horse's mouth. To make a model understand them, you have to kind of do things. Sometimes just like, well, let me put it this way. I think I brought this up before, but there's a thing called one hot encoding where you actually give a number for something, and whether or not you were looking for the days of the month or days till expiration or days between full moons or anything else, you can actually put that down as a number and then get a inference to how different events based on time actually come in. But if you kind of see it here, this is the last 100 days of the market. You pretty much had a couple of times where there was big diversions. And every time there's been a big diversion, I've made some fairly large money in the market. The last time we made big money in it was back in August, and that's this little fishhook looking thing that you see back here about 50 days ago. But you basically had two little parts that didn't jive. This little red line out here is, you might want to think of it as the fair market value based on all the inputs that we see. If I would have ever tried to write a model to put all these things together, they would have pretty much canceled themselves out. But if you wonder what I am thinking, that there's at least 400 points, or excuse me, there's at least 200 points down in the NYSE right now, and we haven't even closed the day out. This is for data from last night. But we've been on a one-way tear lower for the last 14, 15 days, where it certainly appears to me that a lot of people have been getting out of the market, and you just don't see it in that. You see it in other things. In fact, I have my own. Let's do this, because I think I can do it fairly easily. Let's just look at the summation index on the NASDAQ. Let me get up here. Okay. This thing has rolled for a while, so this is kind of where you're going to find weak markets. But I wanted to see this, and this is just, of course, if you ever look at the summation index, it's basically a 19-day over 38-day oscillator of advancers and decliners. And they have a thing called a 5% and a 10%. But, you know, we were back 8 days ago. This thing started heading down. And this, of course, is just the equivalent of advancers and decliners. What period does that represent on the summation index or on the model? Both of them are dailies, by the way, so it doesn't really matter. Hopefully that answers that question. You can always give me a call at 877-927-6648. But one of the hardest concepts to come in, yeah, it's all my stuff is on dailies. I don't do weeklies or monthlies or anything else. I pretty much just look at the high to the low without a major reversal and look at it that way. That's why you don't see me looking at a lot of weeklies and monthlies. I'm basically wondering about what the high was and what the next major low was from that. Okay, anyway, this McClellan summation index, I guess I can zoom into this, get a little closer. You know, we've had a break since this thing and not a real move higher. So the market has been rather fragile and weak for a while, especially in the NASDAQ. Let's take a quick look at the NYSE out here. Same kind of thing. This one broke a few days after the NASDAQ. So the NASDAQ's been leading us. But if you look at the trend from the 5% and the 10% in the summation index, this thing's been headed down. And I just assumed that the S&P would follow the NASDAQ after it really started getting hammered. But we'll see. But anyway, just a few random things. Okay, I got a quick question here on models. Why wouldn't it have worked that way? If you flip a quarter, and that quarter has been modified so that it flips 65% of the time on heads and 35% of time on tails. And we're going to say that that's the best indicator I've got. If I actually flip that quarter twice, or let's say I get 2 quarters and do the exact same thing to them, just flipping one, I've got 65%. But if I flip 2, it actually drops the percentage down because you got 65% on one, 65% on the other. You're actually now dropping down to about 48%. So even if you have 2 non-correlated items and you use basic statistics, it will actually drop the probability down. And machine learning and machine models solve that problem by longer-term inference and patterns. There's no real pattern, even if you have a statistical edge. If you've got one real good signal, you're better off using that one big, great signal than multiple signals, unless you actually have some kind of algorithm like a machine learning algorithm to put those together in context and in patterns and in time. So hopefully that answers those questions. We'll get back to charts here. iRobot. Very interesting reaction to earnings on it. We were talking about this, I think, in the den a week ago, and asking whether this thing is anything more than a slightly weird vacuum sweeper company. And, well, certainly one of the bigger candles out here today. Totally went and filled this gap with more volume from the April 26th gap up. And I probably shouldn't have left that door open today, but it's such a beautiful day down here. But now everybody and their dog has to screech their tires and roll past the house here. A remote-controlled sucking sound. I thought it was kind of like three blind mice just wandering around the floor picking up stuff. There's probably a little bit more intelligence to it, but
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets, right here on TFNN. Wow!
And we had an email real quick. You can always email me at path@tfnn.com. The question was about the 9-day moving average, and the same thing. You want to see somewhere around 10 to 15 days above the 9-day moving average, a close below it, a close back up it for a few days, and then the next dip below that is when you want to pull the trigger if you're playing an equity. If you're actually playing the options on these, I think I said this the other day, you almost have to kind of take the plunge and anticipate the move, because the premiums bounce up so high so quickly, it makes it much tougher to make money. And you can, with options, kind of do that if you get out of the money options, and then that's where you get your big bounce. But the reason I like the 3x3 over the 9-day moving average is that you get with the 3x3 displaced moving average, which is nothing but taking an average of the last 3 days and moving it forward 3 days in time. And by doing that, you get a kind of a line where you want to stay below that. And it's a good way to say, okay, especially when you're going sideways, that you don't want this. And after you get the signal, like today, on a fairly decent day, and you start getting volume, you want it to stay underneath that price projection out to the next 3 days. So it's one way of just kind of putting on not a trailing stop, but a kind of a move out here that gives you a good indication of what's going on. So, and just take the last 3 days, average those, and just say that's the number you want to stay under if the trend is still your friend to the downside. This works on the upside too. If you get 15 days straight down, you get 3 days up, you get 3 days down below, and then the next click above. And that's kind of the break of the parabolic move. Some people like the parabolic SAR. I like this one as a better one, as it keeps me out of the trade a little while longer and doesn't bore me out. Because how many times have you gotten bored out of a trade just before it broke? A lot of times it's just this thing right here where you're waiting for a couple of days and then the bottom falls out. The wheels fall off the wagon. In the meantime, sell when you can, not when you have to. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.